I'm going to start with the ticker symbol WOOF, W-O-O-F.
Petco.
What am I? Nice.
Mm-hmm.
You know your stocks, your stock symbols.
Yes.
So Petco still in the middle of a turnaround here, and its latest earnings report sort of underscores that. So shares of Petco down about 14% in the pre-market. Company's second quarter forecast fell below consensus estimates. This is outweighing a better than expected first quarter, which actually included a return to positive revenue growth for the first time in about 2 years. So this is a pet health and wellness company. They don't just sell, pet supplies. They said that there was a partial tariff refund they got last month.
Oh.
They said that's going to be offset in the second quarter by incremental tariffs and higher gas prices. Now, the company it does have this strategy right now where they're trying to move away from cost cutting and towards growth initiatives. So they're restocking in-store merchandise to feature more private labels, also premium fresh pet food, and they're expanding to build out in-store veterinary services like grooming and training, and that really did help the situation in the last quarter. But again, that forecast not living up to expectations, and Petco is down 13.5%. Okay. It was up 8.5% though year to date.
They compete with Chewy, right?
Yes, they do.
Yeah.
No one takes my money easier and quicker than the Chewy.
Yeah.
I see the Chewy boxes in my building all the time.
The way you click through, it's the fastest way to lose money.
Oh, geez. All right. We got it. We pay for our pets. What
Vet
can I
bill
tell you?
goes woof.
Oh,
Next.
Cute. Five Below. This is the discount retailer where most items in the store are below $5.
Oh, okay. I get it.
Well, the stock is down more than that. It is down 10% right now, but it was up 18% year to date. So the stock is coming under some pressure here. It beat first quarter earnings expectations, raised its full year profit guidance, but the CEO on the earnings call signaled caution about the consumer in the months ahead. Same store sales rose 23% in the first quarter. That was better than expected. Comparable sales forecast growth of 6 to 8%. Okay, all good so far, right? But it left its comparable sales guidance for the second half of the year unchanged.
Oh, okay.
That's what's worrying investors. The CEO's calling out higher gas prices, sticky inflation for consumer strength going forward. He worries about consumer sentiment. He said, look, this last quarter we had the higher tax refunds. People went out and spent them. That's not going to be happening here in the current quarter, so there's some concern. Look, Dollar Tree, Dollar General, all posted strong quarterly results recently, because even more affluent customers are looking for bargains in these stores, but they're all cautious about the consumer going forward.
Okay.
All right, PVH. We don't talk about this stock often. They own Tommy Hilfiger and Calvin Klein. Stock is getting pummeled here, down about 25%. Cut its full year revenue outlook, warning about the war in Iran, denting sales in Europe, the Middle East, and Africa. It's one of the few U.S.-listed companies to slash its guidance due to the Iran war. So go figure. The region made up 47% of sales over the first quarter, that, EMEA region, and much more than it did for Ralph Lauren and Abercrombie and Fitch. So the guidance cut overshadowing a first quarter earnings beat at PVH now expects flat revenue growth for fiscal 2026 compared with a slight increase that it had forecast previously.
Yeah, I am looking at the PGEO function for PVH, and that's their biggest business, EMEA, versus the Americas or APAC. Interesting.
Yeah, outsized exposure there, and so they're getting hit by the war in Iran.
Stock movers. Thank you so much. It's a podcast.